The crypto market is about risk versus reward. Boom or bust. King and moon or go to zero. Well, how does XLM fit into that narrative? We're also going to talk about some Bitcoin issues going on in which we know Bitcoin affects the whole market. And something that I have to share with you in regards to buying power. Specifically, buying power of crypto. And happy Friday to you all. Let's just take a quick moment, take a deep breath and go, the weekend, we made it. Lee starts us off saying, almost time to pay taxes. You will see a lot of selling. Keep that in mind because you're gonna see more reasons on why people will be selling here soon. And it's our peers that are gonna be selling. Reverend Funky chiming in says, this movement feels like a shakeout before ISO. I might be down, but you're not kicking me out. I got my tickets to the big show. Stay vigilant, fam. My cock smells. I like that one. Very clever name. Says, I'm not selling, but I'm sure AF not going to keep buying. It's just not all it's billed to be. I think a lot of people are thinking what my cock smells. Like, that is so freaking cool. Thinking the same thing, okay? Mike's sitting here and he's like, dude, I got a bag, but I just don't want to add to it because it's a risk versus reward type play. And that's what we're going to talk about in regards to XLM today. Bitcoin sitting at 36,564. Some breathing room from this morning's video where it was touching 35. That's not a nice thing we want to touch. ETH 1950, Sol retracing. XRP at 60.9 with XLM the height of the show. Down 1% last 24 hours to 11.7. Would love to see XLM crawl up to that 12-cent mark. More student loan borrowers are walking away from their debt in bankruptcy. Student loan payments are firing up here in the United States, and for those of you out there that are wondering, it's about the same age demographic that's big into crypto. So if they're filing for bankruptcies on a greater scale, and more people are now having to make those payments because they're firing back up, you just took out a purchasing segment of crypto, right? It's not good news that I want to report, but the truth is you do. You have student loan payments firing up in the same age group that is heavy into crypto here in the United States. Okay? You also have viewers out there like Mike that are like, yo, I got bags. I loaded them. I don't feel comfortable loading my bags right now. There's nothing wrong with that. My point is, do you see how we just gave a couple instances of some pretty large groups of people that will not be buying for a while? Keep that in mind because, again, it's risk versus reward, and we're specifically talking about XLM. In the first 10 months of the new policy, student loan borrowers filed more than 630 bankruptcy cases. Doesn't sound like a lot, but it's a significant increase from recent years. The vast majority of borrowers seeking discharge have received full or partial discharges. Here's where the scary stat comes in. It's not the number of people that are filing for bankruptcy. It's this bubble. And this bubble is pulling away purchasing power from crypto. High interest rates, high loans, high credit card debt. Yeah, you got all those loans stacking up and things are still expensive. You got less money, right? Discretionary income. Listen to this stat. Outstanding student loan debt in the United States exceeds $1.7 trillion. And about 7% of the student loan borrowers have a balance of more than $100,000. Even before the Rona, some 10 million borrowers were in delinquency or default. Okay, so we talked about the default, right? The ones filing bankruptcy getting relief, full or partial. What about the people in delinquency now where their credit scores are getting affected, which means now they're going to pay even more for credit card debt. They're going to pay more for their auto loans, more for their home loans, on top of already high base interest rates, which means their purchasing power for discretionary items like crypto, which have a very high risk appetite, risk versus reward. You know what we're talking about here. They're not going to be diving into that pool. So you've got these debt bubbles popping up and getting bigger and bigger. And as those debt bubbles grow, crypto, discretionary spending, not just crypto, is going to be reeled in. Keep an eye out there. Retail sales fourth quarter, retail sales first quarter 2024. Be cautious. You might see some really, really piss poor results because a lot of people have tapped into the credit well and I don't know how much buying power and dry powder they're going to have around that Christmas retail season. Bitcoin price consolidates as the SEC looks to delay the ETF decisions until January 2024. We've all been thinking it, right? And that's why the market is like, okay, so what? We get it. We know Gary's plan. The appetite for the ETF approval is there, but the expectation is that it wasn't going to get approved. Our expectation was realistic. That's why this move here is not crushing the market. The window for the SEC to approve multiple spot BTC ETFs is all but closed, and the regulator has already announced delays for several of those applications. This suggests that the first spot BTC ETF with Snoop D-O-double-G in the LBC will not be approved until 2024, with investors now focused on the deadline for the ARC21 shares application, which is January 10th. So now when we start looking at dates, we're like, okay, maybe the heat from the BTC ETF is going to cool down. Well, as it cools down, we're going to focus on the market, and we're going to say, okay, where is the softness showing up and how much softness is showing up? Again, we're able to use these news events. We're able to use this data to help us picture out what our risk versus reward appetite looks like. Because if we keep seeing down the road that it's like, oh man, this is so poopy and boring. Oh my God, balls. There's a lot of balls. You're sitting there going, okay, well, either I could keep stacking or maybe there's somewhere else I could go to make money at the time. Because there are traders out there are people that are going to need money now. We talked about people paying taxes. That's right, tax season coming up. There will be a lot of forced selling so people can liquidate so they can pay their taxes. Student loan payments, pulling that out. People having to get new cars. Now, those interest rates on these cars are crazy. You're not going to have discretionary spending. ETF news gets delayed. You're like, okay, I got some time to make money elsewhere. All of those things contribute to people not wanting to get into crypto en masse right now. It doesn't mean that they don't want to get into crypto. They're just like, well, you know what? The timing isn't lining up with my expectations and my needs, and there's nothing wrong with that. While many have suggested that the ETF hype was a buy and sell the rumor news type of event, the lack of an approval this week has resulted in only minimal decline from the recent high, while the price chart shows a trend of higher highs and lower lows. So we've got some news. Now let's talk specifically in XLM regards, but using that news to kind of tell the narrative, tell the story, right? Because it's not me telling the story, although I am the storyteller. The story is actually being told by the markets. Now, looking at XLM right here. Buy the rumor, sell the news, ETF pump, risk versus reward appetite. The best way to look at that is if we zoom out just a little bit, okay? There was a healthy movement here around the Torres pump time. Now, the problem though was that we only got to 18.3. And the expectations from a broad group of y'all, I mean, a lot of y'all out there were telling me, Klaus, I was expecting 2025. Seriously, there's tons of comments like that. And I was sitting there and I'm reading and I'm replying and I'm looking at this and I'm like, you know what? People's expectations are very robust because at that time, we were sitting right around 10 cent mark. I was like, oh, wow, okay. 2.5 times at that 25 cent mark. Okay, that's very bullish thinking. But then it never happened. It didn't materialize. And then what happened, you saw a secondary attempt. The secondary attempt was lower than the primary and it just kind of faded on down. Buy the rumor, sell the news. The risk was greater, right? Because you saw the price decline than the reward, because the reward was the expectation that it would go even higher. Now, where that risk versus reward ties into the story even greater is when we zoom out a little bit. It's when we look at this, when we zoom out for a 1-year time period, you sit here and you think, you know what? As a trader, you had a couple opportunities and they were minor, very minor, and the windows did not last long. This isn't a 1-year time period. Now, crypto we know is very volatile, very risky. So if you're going to play in a very volatile, very risky market, financial instrument or tool, whatever you're going to use, the reward has to be there. You're not sitting here telling me right now that you're watching this video going, Klaus, I'm into crypto. I expect 15% returns for the year. I'd be looking at you and I'd be going, dude, gal, homette, you might want to go to a different market because you got a lot safer chance of getting that 15% return without getting flushed into the toilet. Now, if your expectations are Moon and Lambo, then the crypto space or the casinos or some other sort of degen things that we could talk about after, a few drinks, yes, then that would be the right places for you. But the reward has to be there because the risk is always there. And with XLM right now, as I'm looking on the screen and as I'm talking about this, I'm thinking, okay, the reward this year has been minimal in the last year. Yes, some of you out there are going to be telling, Klaus, I bought in at 7 cents. I dumped it at 15, 14. I doubled my money and then some. I said, yo, juicy booty, but it didn't happen that often. You didn't get to play it that much. For hodlers out there, what did you do? You didn't gain much in the 1 year. Now, the story of risk versus reward and appetite gets even worse when you zoom out to the 2 year. Because, see, in the 2 year, the risk versus reward in the crypto story becomes more evident. You've seen even within that 2 year time period, we have been as high as 35 cents. But now you're like, dude, that is so far away. Oh my gosh, I can't even fathom that. I can't even fathom 20 cents right now. But the risk is still there. The reward seems less. So what do people do then? They don't play in that pool as much. Now, if XLM got more pops like other segments of crypto, then it would make a lot more sense for people. But you're going to see a lot of people leave their bags packed. A lot of people be forced to sell to pay for bills at the end of the year. A lot of people that are going to have liquidity problems and no dry powder because everything is going to be expensive. And a lot of people that are going to go, whoa, you're telling me that this year, if I would have played the Bitcoin market, I would have been up 120%. XLM, if I would have played for the year, I'm 65. I get it. Risk versus reward. But Bitcoin is less risky than XLM. Staying power of Bitcoin, you can't argue that. Less risky and gave a higher reward. Traders that are going to use metrics, traders that are going to use data are going to say, okay, get rid of emotion. Get rid of all the fake news out there. Get rid of the world is going to be moved on XLM. Oh, the world is going to be moved on Bitcoin. Bitcoin's going to be every government's backbone. Digital gold, blah, blah, blah. Okay. Remove all that and look at the data. The less riskier asset is yielding almost double the reward of an asset that is riskier by a fairly large margin. This is just in 1 year, year to date. Let's do it even further and oh crap. Remember that 1 year we were looking at on this chart? Well, look at that. In 1 year for XLM, all that risk has earned you 30%. Now that's if you sold. 30% is not bad. I understand, but the risk applied to this 30% is nuts. You could take less risk, played the BTC, and gotten 120%. Now, hindsight is 2020. I understand. But what's happening is the people are going to be using stats metrics like this, and they're going to be looking at it going, whoa. Risk versus reward value proposition. Where is it at? Go to the 2 year, and you see that BTC down, yes, 37%, we understand. XLM down 65%. Whoa. Start zooming out even more and you see the story gets even crazier. Now, there were times here when XLM did pump a lump more than BTC. But look how small that was. Look at how small this window is right here. Right? Early 2021 to mid 2021. Where the rest is, check it out. 2021, late 2021, October, all the way through to now, BTC has been better yielding. So yes, you had a 6-month time period where you could tell me, Klaus, the risk versus reward was worth it. I understand. I give you credit. Tip of the hat, kind sir. But then I'm going to tell you, remove emotion from your thinking and see that from October of 2021 to now, the last 2 years, BTC has been the much greater player with less risk. And I'm telling you right now, the people out there that are looking to stack, the people out there that are looking to hodl, to grow, to trade, to make moves, they're looking at stuff like this and they're saying, you know what? There's less risk to the downside on BTC, and statistically, there's more to the upside. 422% to the gain versus XLM's 137%. Yes, you had 6 months here. You could have maxed it out. But then that means you exited the market then and you haven't been playing since. Otherwise, you would have seen less riskier assets like BTC earning more. And it's all about risk versus reward, not emotions, but the data. Time to pay taxes. Well, guess what, everyone? We've got more than that. It's not all that it's gonna be billed to be. That's what people are thinking too. I'm not selling, but I'm not stacking. You see my point here? People are making the choices based on the data without the emotion, without the FUD, and without the lying overhyped news. Video's done. Made my point. Catch y'all later.